Hi, and welcome back to The Explainer. It's the 2nd of June 2026, and we are now over 3 months into the Iranian conflict. I want to cover two things. Number one is just another update on the Iranian conflict and timing. And the second would be what else is going on in the world, particularly as we look into now the second half of 2026. So let's talk about the everything else piece first. I'll come back to Iran. As reported last time, equities continue to march higher. And there may be something behind that in terms of, I guess, two conflicting things. Number one would be the artificial intelligence tsunami and its effect now on productivity, I think for people generally and for companies in particular. And I think we're seeing that starting to see that coming through in the data. And as companies become more productive, they probably will become potentially much more profitable. And I think equities are trying to tell you something about that in terms of the profitability of companies going forward. And I think we'll see a lot more of that in the second half of this year. On the other side of the ledger, we have a flood of IPOs or flotations coming to the stock market in the second half. The three biggest and well publicized would be SpaceX, Anthropic, and OpenAI. SpaceX is close to $2 trillion. Anthropic at $1 trillion and OpenAI at $1 trillion. So quite big IPOs. And that is, in the first instance, kind of bullish for the market, positive, as you know, the various counterparties get behind these IPOs and try to push them. And then second, you can get quite a lot of indigestion post-IPO, and they could even mark some kind of high point in the market as they have historically. If you think back to 1999, 2000, the tech boom then bust. That was really characterized by enormous numbers of IPOs into the end of the boom and then a subsequent bust. And even a couple of specifics like Blackstone, the enormous private markets and real estate manager, which floated in 2007, just before the collapse in the US real estate market. And then Glencore, the mining company, which IPO'd in 2011, right at the end of the previous commodity supercycle, and that one then went into a bear market. So these things can sometimes signal the top of markets. But I think equities right now are signaling that the AI boom is something really to be looked at. I think the second thing would be bond markets, and that would be another potential flaw in the plan for equity markets going higher. Bond deals have been certainly moving up and creeping up of late. And in the second half, we're going to get the full impact of the latest El Nino phenomenon, which is the warming of waters in the Pacific Ocean. And that is going to affect food growing throughout the world. And given fertilizer costs are already going up due to the Iranian conflict, as we flagged last time, although they are not a huge percentage of input costs, they are still going up. And what El Nino will do, it'll affect crop yields because of drought and heat effects. And that'll come through really from July. And in particular, that'll affect things like cocoa, sugar, coffee, wheat. So if you enjoy a mocha and a sandwich, then that's going to become more expensive in the second half. But on an underlying basis, that's going to start pushing inflation up. So we could see an inflationary piece in the second half, which may undermine bond markets. Again, a little bit of a flag there in terms of potential problems. So the second half is going to be interesting. And also, of course, interesting given we should, by that point, have some resolution of the Iranian conflict, I would certainly hope. In terms of where we are now, President Trump is pushing for a very broad-based deal. Obviously the Strait of Hormuz, obviously nuclear weapons, but also crowding in the US allies in the Gulf into the Abraham Accords, which is the détente with Israel, which has already been signed by the UAE and Bahrain a few years ago in Trump's first term. And he wants Saudi Arabia, Iraq, Oman, Qatar, Turkey to crowd into those Abraham Accords as part of that deal. And that would be a very interesting broad-based, I guess you could call it security alliance for the region. and potentially Iran as well, perhaps further down the line. So you could get potentially an extraordinary outcome coming out of this. I would certainly hope we might, and we'll see that in the coming, hopefully, days and weeks. And then in terms of conflict timing, on the one hand, you have Iran, which is unable to export any oil, and therefore the oil reservoirs and storage within Iran are filling to capacity, and they'll very soon be needing to turn their rigs off, which is very damaging to rig infrastructure. And on the other side, on the US and global side, you have, of course, high oil prices and drawdowns of global stocks of oil, and potential shortages. I suspect we won't get potential shortages. It may be brave to say that, but global stocks of oil were very large going into this conflict. The US wasn't that large, but overall, there are around 6 billion barrels of oil globally. And with an 8 million barrel per day drawdown out of those stocks, you've got many months of stocks available. Other things like jet fuel are more technically specific, and you may see shortages more precipitously there. But again, I don't think that's going to be a big thing in the second half, and I think we'll get this conflict resolved, certainly hopefully before then. So, interesting second half coming up, hoping for a resolution soonish, and equity markets for the moment are on a bullish tack, but keep an eye out for those IPOs, which are coming kind of August, September time, as a thing to be wary of, potentially, in equity markets going forward. Thanks very much.